Hello, guys. Uh, Again, my name is Joseph Ejike Orji. Tonight, our topic of discussion will be sin or vice stocks. We call them sin. There's a reason why they are called sin or vice stocks. I'm going to explain it in a few minutes. Basically, this lecture, the main focus will be whether debauchery is profitable or not. Whether it is profitable to invest in debauchery. Of course, you already know that when we say debauchery, we're talking about pleasure. Now, let us begin. First of all, let me make sure that you can see this. My presentation. Okay, good. I'm sure you can see it. Now, sin. Why invest in sin stock? As a matter of fact, why are they called sin stocks or sin shares? We call them sin shares or sin stocks for a reason. So, generally speaking, those stocks or those shares of companies that operate in the gambling, tobacco, alcohol, defense, cannabis, as well as adult entertainment are called sin stocks or vice stocks. Due to some reasons, some people, due to their religion or their personal convictions, they tend to avoid investing in those kind of stocks. But when they do that, they are leaving a lot of money on the table. They are called sin stocks because the products they make or sell are frowned upon by the public as unsavory or as harmful to the average consumer. So because of that, they call them sin stocks. But between me and you know that we need to drink sometimes, alcohol sometimes. Some people need to smoke sometimes. They can't help. A lot of them, as a matter of fact, are not willing to change their habits. So whether they call them sin stock or not, those stocks have a lot of value in terms of making you rich. And as an investor in the stock market, you want to make your money legitimately and you want to be rich. And if that is your goal, this is one of the stocks that can get you there. So like I said earlier, many investors tend to avoid buying shares in this company because of their due to ethics and principles. But generally speaking, according to historical evidence, the performance of these companies that are called sin stocks, they have really provided substantial higher returns. Even sometimes, the returns are bigger than the broad market index like S&Ps and Dow Jones Industrial. Now, at this point, let's look at this, answer a few questions. So is debauchery profitable? Debauchery is another name for pleasure. And the sin stocks, the things they provide, the kind of product they produce, or the kind of service they offer are related to pleasure. Things like drinking, smoking, gambling, and so on and so forth. So customers buy alcohol, tobacco, firearms, or even gamble, regardless of which way the market is going. So people who like to smoke or those who like to drink or somebody who is a gun enthusiast, they will spend money on those products irrespective of where the market is going or where the economy is going. I used to be a smoker in the past. I remember in those days, in my college days, whether I take good or bad, I must buy a cigarette. I don't smoke anymore. But in those days, hardship doesn't, as a student, of course, you normally go broke most of the time. in those days. So, but still, I find a way to smoke every day. So that tells you that the demand for products that are being supplied or that are being produced by sane stocks have inelastic demand. So a person addicted to alcohol or tobacco will still buy and consume the alcohol or tobacco, even if the prices increase or the economy is in a recession. As a matter of fact, there's this rule of thumb that I use to gauge the viability of this kind of stock. If somebody is very happy, maybe something good happen in their lives. They drink, they smoke, they celebrate. If somebody is depressed, he drinks, he smoke, you know. So either way, these companies are making sales. So since stocks are generally not generally as negatively affected by the market slumps as the other kind of products, like during the COVID-19 pandemics, there was a lot of lockdowns. People were forced to stay at home. Some companies like airlines or those companies that have to do with vacation, they suffer so much because of dwindling sales. Many people cannot travel through the air. In fact, the airline industry almost went bankrupt. But people stayed at home and continued to smoke and to drink and to gamble. So they gain both ways. Okay? Now, let me summarize this. Well, let me give you some list of companies that are considered sane stocks. So some of these companies, there are a lot of them, but the one that are most popular are the one I'm giving you here. First one is Philip Morris International Incorporated. This is a company that they manufacture and sell cigarettes, tobacco, and other nicotine-containing products. We have the Altria Group. This one also produces tobacco products. The most popular product they have is the one they call Marlboro cigarettes. Diego PLC. This one produces, market, and sells alcoholic beverages, things like scotch, whiskey, gin, vodka, and other drinks, alcoholic drinks. Then we have Smith and Wesson Brands Incorporated. So this company, they design, manufacture, and sell firearms, like guns. Yeah. So they offer handguns, including revolvers and pistols, long guns, and so on and so forth. Now, there are other ones that we have that are also popular. I'm talking about the Constellation Brands Incorporated. So this one produces, imports, market, and sell beer, wine, and spirit in the United States, Canada, and Mexico. So some of the popular brands it has, things like Corona Extra, Corona Premier, Corona Familia, and so on and so forth. Then we have next one, the sixth one is the Las Vegas Sands. This one have to do with hospitality. So the product they offer they are in the hospitality industry. That's the simplest way of saying what they do. So like the company Las Vegas Sands owns and operates the Venetian Marco Resort Hotel, London and Marco Hotel, and so on. They have hotels all over the place. They also are involved in accommodation, gaming, entertainment, and retail malls. All this have to do with entertainment and hospitality. So these are the 6 popular sane stocks we have. At this point, we are going to answer an important question. Why invest in SIN stocks? There are many reasons, but I have two reasons that are very important. First one is better predictability. So I have already explained this a few minutes ago. The demand pattern for the vice companies or the SINs companies is more predictable because the demand for what they produce is relatively inelastic. So, which means that the demand doesn't change when the conditions change. So, people who want to smoke, who are smokers, will smoke anywhere, regardless of what the economy is doing. Those who are drink will drink anywhere. Those who want to gamble will gamble anywhere. So, the demand for what they produce is more predictable than regular businesses. So smokers are unlikely to cause smoking. Drinkers do not lower their alcohol consumption because of inflation. Gamblers and gun enthusiasts do not change their consumption pattern quickly. Take a long time for the change. So, and as a proof, between me and you, we know that over the years, over the decades, there have been anti-tobacco laws, lawsuits, and even fewer smokers. Yet, tobacco companies have been able to keep up profits and raise dividends, steadily. Another one is this: good return. Good return. Now, all these two reasons I'm going to show you in real life by looking at these companies, their stocks, and also some of the variables I used to vet companies. So another one is good return. So it says most SIN stock reported huge profits and also pay out dividend to investors, despite the fact that many investors are reluctant to buy their shares. So now, not only that, SIN stocks or companies that belong to this category have strong brands, and their brands have actually gained monopoly in the market. So now let us look at some case studies so I can show you why these stocks. Let me show you that in what I'm saying is true. These stocks are really doing good, and they can make you get rich. But remember, stock investing is a long-term thing. I'm not saying that they will make you rich overnight, but they will make you, if you invest in those stocks over the years, you will see your investment return reasonable amount of money. And depending on the size of your investment, they can make you rich. So when I analyze stock, I use 4 variables most of the time. One is dividends, which means a share of the profits that companies gave to their investors. Now, most companies doesn't pay dividend for years. So many companies don't pay it. Only a few companies that have enough money to pay, or that have made enough money to pay a share of the profits, pays dividend. Majority of them don't pay it. But since stocks pays dividend. So I look at dividend. Do they pay dividend? 2, current ratio. Does this company have the ability to pay off their debts? That is what I will check using current ratio. Then profit margin. Are they making profits? Next is return on assets. This one shows us how profitable a company is relative to its assets or resources that it will control. So if a company is good in 3 out of these 4 variables, I consider that company a good investment. Now let me apply it to some of these SIN stocks. Okay. Now I'll use some of them for, let's say, I'll be looking at a result for Smith and Wesson, Diego PLC, Philip Morris, and Atria Group. Let's start with Smith and Wesson Incorporated. The symbol is SWDI. Let me open the book. So I'll be looking at the dividends. current ratio, profit margin, and return on assets. Okay. So I'm going to take you to Yahoo Finance, which give us free information about these companies. So I'm going to paste the trading symbol here. That will bring us Smith and Wesson. Okay. Share price is low, $14.19 per share. But look at the variables. Even though it looks right here, remember, this is just for a day, beginning of the day. So if you look at the 5 days information, if you change, it will change, and 1 month, it turned green automatically. So because that gives you enough time to factor in several variables. However, what we are looking for is the statistics for this company. Click on that. You can see that the profit margin for this company is 22.51%. See, which you can see here, 22.51%. See, what does this mean? So let me just verify them, then I'll explain what they mean. Now for dividends, let's check the dividends. Okay, for this company, the dividends, you can see they pay. I think it is $32 per share. You can see it right here, annual dividend rate, $32 per share. See, sorry, 32 cents per share. I'm going to say, I can see it here. I wrote it down here. Now let's look at the current ratio. Again, I'm going to explain what these numbers mean in a few minutes. Just let me confirm them from the website. Current ratio for this company, you can see the current ratio on the same. It's right, it's somewhere here. Okay. Yeah, right here. Current ratio 3.68, which you can see here. 3.68. Then profit margin, I've already explained that. Look at return on asset for this company. The return on asset. Okay. See, return on asset is 33.92%. You can see it right here. 33.92%. Now, let me explain what all this means. Let me start with dividends. So Smith and Wesson paid a dividend of 32 cents per share during the period of under investigation, which is, that means they are paying dividends. Their current ratio is 3.68, which means that for every $1 of current debt they have $3.68 available to pay the debt. So they can more than take care of their debt, which means that if they have 1 million debts, they have 3.68 million available to pay the debt. So they can, again, it means that they can settle their debt. And when a company can pay their debt, that means they are not constrained. So they can borrow more and execute a project that will make them to be more profitable. But if they cannot pay their debt, it means that they cannot borrow more. That means if there's a new opportunity, new project that they want to do, the banks will not be willing to give them money. And that means they will lose that opportunity to their competitors. Now let's look at the profit margin of 22.5%. Let me make sure you're saying this. Yep. 22.5% is their profit margin, which means that Smith and Wesson, the company converted 22.51% of all their sales into profit in this 2022. I mean, so far, the year have not ended yet, but they converted whatever sale they have, they converted 22.51% of their sales into profit. So they're making profit. Another one is the return on assets. Return on assets. Sorry, mistake. Return on assets of 33.92%, which means that the company that every $1 it invested in 2022, every $1 invested generated 33.92 cents. So, which is good for this company. Now, let us repeat the same process for Diego. Now, they paid the 76 cents per share dividends, and their current ratio is 1.52, which means that for every $1 of current debt, they have $1.53 to pay it. So which means if they have $1 million debt, they have $1.5 million to settle it. So they have a healthy financial in 2022. Now, 21.03 cents, 0%, meaning that Diego converted 21.03% of all their sales into profit in 2022. And the return on asset is 8.78%, which means that every $1 they invested in assets in 2022, that $1 generated 8.78 cents. Good, not bad. Now, Philip Morris paid $5 per share. I mean, you can see this here, PM. I can put it in so you can see that in Yahoo Finance. Okay, I have it here. Philip Morris. Now they're all right because it's just 2 a.m. Market is just opening in some countries, so don't worry about this because it's just a day information. You look at 5 days information, it's changed to green automatically. And yeah, as an investor, not a trader, stock trader, but a stock investor, you look at the long term, not short term. Okay. Now, if you look at the statistics for this company, you see that they have dividends of $5 per share, it's really annual dividends, you can see right there. And that they have return on asset of 19.75% and profit margin of 28.56%, which is not bad. And their cash ratio is 0.89. Their cash ratio is not that good because 0.89 means that for every $1 they have 89 cents to pay the debt, which means if they have a $1 million debt, they have only $890,000 to pay it, which doesn't look good, but they are good in other 3 variables of dividends, profit margin, and the return on assets. They converted 19.75 of each $1 they invested generated 19.75 cents, which is not bad. So now I'm going to round up by saying, having showed you all this, you will see, or you can agree with me, that since stocks are not really bad, which also means that Debauchery actually pays. Debauchery are actually profitable. I mean, you don't have to give up all the vice yet. What I mean by that, I don't say start smoking or start drinking or start going to nightclubs if you don't do that already. But you can, those stocks, those type of companies, they provide jobs for people and they can help you to make money. So you can invest in them and then get rich too. I hope you enjoyed my lecture tonight. If you do, I encourage you to subscribe to my channel. Thank you, and I'll see you in my next lecture. Bye-bye.